Welcome to the Standard and Rich podcast, where finance meets fun. Join your hosts Danny Gallo and Jonathan Elkoubi as they navigate the complex world of finance with a touch of humor. Whether you're a seasoned investor or just starting out, this podcast has something for everyone.
And welcome back, everybody, to the Standard and Rich podcast. This is our second episode. I'm sure you guys watched last week's episode. Was a great episode. Today we're going to be talking about how to start investing. Well, I know a lot of our young viewers want to know. Obviously, this is very important. So where do you guys start off? It's so complicated. There's so many things you have to look at. So the best thing to look at is the S&P 500. Now, the S&P 500 is a compilation of 500 of the America's greatest companies, biggest companies, and it's basically market cap weighted. So most of the money is in the larger companies, but your assets are still spread. It's very diversified. It's like every industry in the country you could think of, and it's a very broad ETF. So the best way to do this is not to buy in at one shot, because you could buy in the highs. So if you buy in 2001 or if you buy in 2007, you're not going to get a good return. You should dollar cost average, depending on what your budget is. You should do a monthly, $100 a month, for example. Like, that's what you guys should do. So Danny, what do you think the S&P 500 average return is for the last 50 years? What do you think the average return is?
If I'm not mistaken, it's around 10%.
Well, over here it says with dividends reinvested, it's actually 11.3%. That's pretty impressive, don't you think?
Per year, yeah, it's very impressive.
It's very impressive. So, if you guys dollar cost average, you can expect that return, and I'll give you guys like an example scenario of why it's so important to dollar cost average and start early. Start early when you're in your life. There's a saying, the best time is yesterday, but the second best time is right now. So if you invest $1,000 at 20 and add $100 monthly until you're 60, so let's say 40 years, you want to retire at 60, at an 11.3% return, you will end up with $830,000. Okay, now take the exact same scenario. $1,000 start, $100 a month. You just start 5 years later, so instead of 20, you'll start at 25. You will end up with $480,000 instead of $830,000. So it's almost half. That's insane. It's mind-blowing. So the most important thing is to start early. I can't emphasize this enough. Start early. Start right now. It doesn't matter if it's $50 a month. Just start a budget and you'll get into the habit of investing. And remember, time in the market always beats timing the market. So, Danny, do you agree with that?
You are completely right, Jonathan. It's very, very hard to time the market. So just staying in it and dollar cost averaging is the best way to go with it. Like Warren Buffett said, the trick is not to pick the right company. The trick is to essentially buy all the big companies through the S&P 500 and to do it consistently and to do it in a very, very low cost way. From that segment, we're going to jump into our market news segment. So this week, obviously, Jonathan, as you know, is a big week for earnings. Is there any stock this week or stocks this week that you'll be looking at?
I'm definitely going to check out Alphabet because full disclosure, I do own Alphabet. Full disclosure, guys. So I'm going to be excited for that one.
Is there another stock this week that you'll be looking at, or is Alphabet one of the main ones you'll be looking at?
Well, I'm going to look at Alphabet. I just recently acquired Tesla, so I'm going to be looking at that too. It looks like every big company is on this list right now. Like everyone is reporting this week, huh?
Yeah, you have some pretty big names. You have, I'll be looking at Exxon, as we spoke about last week. Tesla is one of my positions as well. A smaller position than I had before, but still very intrigued on it. It is one of the positions I would like to be one of my top positions. I just want the volatility from it to kind of go on the sideline with all the negatives that's coming out. So the earnings, I don't think the earnings themselves are going to be that, um, I mean, I probably think that the earnings are already priced in to the stock right now. What I would like to see is, well, here is the earnings call with Elon, just to, I think the investors want to know about the compact car and the FSD and robo-taxi, all those things, like giving a timeline on it so they could price them into their evaluations and the vehicle margins. I love the energy sector of Tesla. It's been growing at a rapid pace, so that's another part that I'll be looking forward to. But these other factors are pretty important
Yeah, but like,
for especially the investors. Like everybody just talks about those topics. They really want clarity on those topics. Most of the big investors, like you could follow them, they're all on X, and you could see what they say. Like, and it always comes back to the 25K car. Our evaluation is based on the 25K car, so we need guidance on when is that gonna happen. Well, I say 25K, but the compact car, the smaller car.
yeah, but every time Elon Musk gives like a time or a date, he's always like overshooting it. He never meets his dates, you know? He's always late.
Yeah, but that's the Elon effect. So let's say something usually gets done in 3 years. He'll say 1 year, but instead of it being done in three, it'll be done in two. So it's just to motivate his troops around him to go at a faster pace. And I'd like to see where Optimus is at. It's been growing very rapidly. It's been expanding very rapidly. It's looking better and better all the time. So that's another thing that I'm really looking forward to in Tesla. There's also some semiconductors that are gonna declare this week, like Intel on Thursday. There's Microsoft on Thursday, Alphabet on Thursday. So that's a pretty big day of earnings on Thursdays. Caterpillar, really a bunch of different part of the economy that are going to be reporting there.
Hey, you know who
Sorry.
else is reporting?
Who else?
Spotify. And if you guys don't know, you can
Yeah,
find this podcast on Spotify, YouTube, Apple Podcasts, and SoundCloud. So, guys, if you're watching this on any platform, please be sure to leave a like. It'll really help us. We'll be posting weekly. So, leave a like, subscribe, and stay tuned.
he's right. It does really help us just carry on and keep doing these episodes that we love doing. And there's another one that I'm interested in is Wednesday Boeing. I want to see if everything that's been happening with Boeing these last few months, is it actually gonna do something on their earnings report? Are you gonna see less of a backlog for planes? Are you gonna see like I would love to see Airbus's earnings as well to compare them. Okay, is Airbus taking a little bit more market share? With everything that's been happening. I know people that won't take Boeing 747 Max or 737 Max just because of everything that's been happening with those planes.
Um, so,
And there's also Meta on Wednesday, which has been
oh, that's
sorry
one
about
of my
that.
best performers.
Yeah, Meta's just been. He said year of efficiency, and he's blown that out of the water. That's guaranteed. So we'll see where that's going. And with their launch of their new AI on Instagram and on Facebook Message and Facebook, which is pretty interesting, as to be honest. We'll see what that does as
I've been
well.
playing
Maybe
around
we'll
with the
talk about
AI.
it.
It's pretty fun.
Yeah, yeah, me too. We'll see what he says about it on the earnings call as well. Maybe he'll plug it in a little bit more.
Yeah, yeah, and hopefully they're not going to spend as much money on the metaverse and blow all their disposable income on useless, unprofitable
Well,
ventures.
they've been scaling back on that, so they still pour a lot of money into it. But we'll see. I think it's the money that they put into the metaverse is more for their the Quest. What's the sorry about that. What's that gadget that you put in your
I think it's
on your
Quest.
head? Quest. Yeah, so the Meta Quest. I guess it's just to expand that and make that a little bit more realistic. But they are spending a lot of money on it.
Yeah, when I invested in that stock, well, I still own it, full disclosure. But I basically thought of all the cash flows that were going into the metaverse was just money being burnt. And I ran the numbers, and the company was still a buy. Like even with them burning all the money, it was still a buy. That's how undervalued they were at 160. Now they're 500.
Well, because people were getting so upset about them pouring so much money into the metaverse and not actually creating opportunities for the shareholder. That's why the stock was going down. I remember I used to see on the news all the time. Well, it's a bit like Tesla right now. Meta there was like Tesla right now, how much it was getting bashed all over the news. It was only negative press about the Meta all the time. Well, was it last year or 2 years ago that they changed their name to Meta from Facebook?
I don't know which year it was. Nothing
Yeah,
matters.
so
2 years ago.
yeah, so that's he did a great turnaround. Honestly, I don't know if I would ever buy Meta, to be honest. Personally, I don't really like Zuck, so I wouldn't support his company. But yeah, so that's just me personally. I have
Yeah.
nothing. I don't really have something against the companies. They're good for small business, I guess.
Yeah, but money doesn't really have politics. You know, I don't smoke cigarettes, but I invest in cigarette stocks. It's all about the money.
You know what? It's true. I don't go pump my gas, but because I have an electric car, but I'll buy a gas oil company.
Yeah.
All right, to move into our next segment, which is the stock battle. So we just came back from the week one stock battle, and Jonathan, you laid a whipping on me this week. How do you feel? How do you feel with this 4% gain in 5 days, and I had 0.74 with Exxon? You
So
know
yeah,
what? I'm gonna tell you something. I'm gonna tell you something. I was texting you all night because oil was pumping one night with geopolitics that was happening. And I was like, there we go. We're going on a ride right now. And then the next morning, the 4%, oil went from 82 to 86 and right back down to 82 the next morning because there was so much confusion with what was happening. So yeah,
listen,
so
I'm happy to be the
I
winner.
thought I was gonna take over from there.
I'm happy to be the winner this week. Obviously, I'm very humble. Thank you guys. Thank you guys. Stop it, guys. Stop. You guys don't have to do this. Stop. Okay. So
But we will do the stock battle from week one for 1 month. So every stock battle we have, the official winner will be declared after 1 month. So
yes,
we
we'll
have
we'll keep you
still,
guys updated
yeah, exactly.
for a month ahead.
So because you were the winner, Mr. Jonathan, you can you can start with your stock of the week this week.
My stock of the week this week. Okay, guys, drum roll, please. Green Brick Partners. You guys probably never heard of this name before. Relatively smallish company, market cap 2.3 billion. Let's run through the numbers. Okay, so revenue growth, insanely good revenue growth, around like 20% per year for the last 10 years. This is the fastest growing home builder in the United States right now. They're located in some of the best areas, some of the best states: Florida, Texas, Georgia. Really, those southern states where real estate's booming. That's really where they are, and they have a really good business model. Their profitability is really nice. Compared to other companies, they don't have a lot of debt compared to the other home builders. Their income's growing at a fast pace, just as fast as the revenues, even faster than their revenues. I know that interest rates going to hurt their business, and obviously it's going to slow down construction. It's going to slow down the whole real estate market as a whole, and the boom that they were going on a run for a couple of years. But I think that the top of the industry, the best players in every industry, they stay at the top no matter what happens. I think they're going to keep moving forward as a fast pace, no matter what economic conditions they're in, and they have a structure in the way they structure deals. They buy options of the plots, so they don't actually buy the plot before before they're finished building. So they buy an option on the plot, and then once they're done, then they have an option to fully buy it. So they pay an extra premium for that. I think it's around like 7%, 7 to 8, around that range. But it really helps them lower the downside. So there's no like if you buy a plot and you're halfway done the construction process and then you discover that you can't sell that house, there's a problem with the area or something, then you don't have to buy the property. You just because you only paid the 8% premium, so you don't have to go through with the option. It's your option. So I think that's why Green Brick is a great choice for a long term hold. Obviously, their balance sheet's really healthy. They have only 350 million in debt. They could pay that with like 2 years to 1.5 years income. Their net income is 300 million. So they could pay that off really quickly, and they have 200 million in cash. So they really have no problem with that. Healthy balance sheet, healthy income statement, all around fast growing company. What do you think about that one, Danny?
We've spoken about JRBK for quite a while, me and you, back and forth. Um, I don't have a lot of negatives to say about GRBK, to be honest. Since you put it on my map, what was it, a few months ago? I've always kept it on my watch list. It's pretty interesting. It's pretty, um, it's like you said, like just the premium lots that they don't need. If it doesn't work out in their auction, then they can just give it back. It's pretty good, so they lose their downside like that. They could protect themselves. The PE ratio is pretty good, it's pretty solid. They've been growing their EPS the last few years. What did it go from? It went from in 2019 from 1.2 to now 6.2, so that's amazing growth. It went from their EBITDA from 74.5 to I think million,
Yeah, million.
74.5 million to 358 million. So honestly, they've been just beasting it. And like you said, they're in pretty good markets. A lot of people are going to markets like Texas and Florida, where their tax, the way that they're taxed over there, or there is more beneficial for people to move there. So people are leaving states like New York, California, that are a bigger burden in terms of tax and even in housing prices. So New York and California are two of the top places in the world where like the rent, or not just the rent, but housing is extremely expensive. And in Texas, you could find so many good deals over there, and it's really they're importing. Texas is actually importing a lot of people from California, especially in Austin. Austin's becoming the new Silicon Valley of Texas.
Yeah, a lot of
So
companies are moving there.
I really like this. I really like this stock. Honestly, there's not much negative I could say about it. Probably the 10 years going to affect it, how it fluctuates with all the rates. So because that could affect their cost of building, but except for that, their cost of borrowing. But except for that, they're a pretty lean company. I've been following them like the past few months since we've been starting to talk about it. I'm just waiting for the. I know I shouldn't do that, but I'm just waiting for the right entry point for me to get in.
Damn, so sounds like a pretty good pick. How are you gonna beat that one?
You know what? The way I'm gonna beat this one is by choosing, drum roll please, the one, the only, DraftKings. So DraftKings has been taking a lot of market share in the online gambling, um, the online gambling sector. So at the end of 2022, DraftKings had 25% of the market share compared to FanDuel that had 43%. And in 2023, that went to 34.1% of market share for DraftKings and 39.3% for FanDuel. So you can see right there that they're starting to build at a rapid pace. They took 9% and FanDuel dropped 4%. So they're going to take a lot of space. They're only legal, sorry, they're only legal in 21 states as well. So they still have a lot of states that they could go into and try to make the legislation favorable for them to get more not more market share, but more revenue and profit into the company. There's also been a big decline in sorry about that, in their stock price. I think it's been down, if I'm not mistaken, probably 15% in the past month. Yeah, 14% the past month. So I think, and I was telling you just today or yesterday, I was like, I just hope this stock doesn't go up before we get to Monday. Um, so yeah, we're talking about short-term trading right now, right? Or short-term, we're doing a competition for 1 month. So if there's a turnaround, I think there could be a pretty good turnaround. It's been varying between that 39 to 47 price this past 2-3 months. Yeah.
Yeah, so
So
I have
I
a
think
rule.
it could be,
Wait, go ahead. What
go
do you want
ahead.
to finish? You want to say
No, go
something?
ahead.
So I have
No,
a
no, go
rule
ahead.
myself. I don't really like buying unprofitable companies. I mean, it's kind of like gambling with how volatile they are. It's kind of ironic that this is a gambling company. But I'm just walking through the income statement right now, and it looks like a bloodbath. It looks like a shit show, red ink everywhere. They lost $800 million in 2023. They lost 1.3 billion in 2022, and they lost 1.5 billion in 2021. I mean, how much worse can it get? They have 1.3 billion in debt. The retained earnings is minus 6 billion, so they created negative 6 billion in shareholder value over their lifetime of the company. And I mean, cash flow statement's not looking any better. They're issuing shares for financing because they're not making any money. I mean, how is this? How is this good?
See, I look at it a different way. If you look at their revenue in 2019, it was at 323 million. Right now, you're at 3.665 billion. So you can see that there's been pretty rapid growth in their revenue. So they're trying to seize that momentum as well and take market share. Their EPS as well has been the same thing. So it went from minus zero point 0.8 to, well, no, it's gone down, but it went minus zero point 0.8, then minus 4, then minus 3.8, then minus 3.2, then minus 1.7. So you're seeing that they're getting towards that path of profitability. And that could come maybe this year with the Super Bowl having the record amount of bets on it. We'll see it at the end of this quarter
Yes, but
because the Super Bowl will be priced into this quarter.
yeah, but you kind of proved me before. You were like 2019 we lost 142 million dollars, and then now we in 2023 we lost 800 million. How could we be losing more money in 4 years with almost 10 times the revenue? We're losing 8 times as much money. We basically just spent all
And
the money we made.
I gave the comparison but to 2019, but if you look at 2020, which was a big loss year, from there it's been going way lower. So it went from minus 4 in EPS to minus 1.7 in EPS. and it's been going down pretty rapidly. So one -4, -3.8, -3.2, -1.7. So is this a year that's gonna draw flat, go close to flat, go into the positive? It could be that year with all the big tournaments that there was with the, like I said, the Super Bowl. Now there was the NCAA championship. So this first quarter should be pretty solid for them. I think so, especially with all the eyeballs that were on. I think the not WNBA, but the women's college basketball with Caitlin Clark and Angel Reese really got a lot of eyeballs onto that sport. So the more eyeballs, the more bets. So
I mean, how much
I think
longer?
short term, I think I'm actually very interested in the company as well, seeing this growth as well. I think it could. I like it short term. Short
I
term,
mean, you seem pretty
pick up on.
uncertain.
No, I really like it. I think it's at $40 right now. It's at 40.55. I think it goes back to 46, 47.
I mean, how much longer can this company really last? They're burning money and they only have 1.6 billion left in cash.
1.6 billion, and they lost.
They lost 800 million last year.
So they have 2 year run rate.
2 years to be
They
profitable.
not even that. They're going to be more. They're going to lose less money this year than they did last year if they keep gaining market share and introducing themselves into new states because they've gone into new states since last year and since the year before. They've been integrating a lot more states. So I think that's the path towards profitability that they'll have.
Okay, well, I hope this goes well for you. We'll catch you guys next week to see the winner. Stay tuned. Please, guys, leave a comment on which investment you guys think is better, who made a better stock thesis. And thank you guys for listening. Stay tuned next week.
We all know who's going to win this week. Thank you guys. And like Jonathan said, don't forget to like and follow. Thank you very much.
Ciao.
Before we go, a quick reminder. While we love discussing financial topics, we are not financial advisors. The information provided in this podcast is for educational and entertainment purposes only. Please consult with a qualified professional before making any financial decisions. Thanks for listening, and see you next time.